Closing bell exchange today, we have Quincy Krosby from Prudential Financial, CNBC market analyst Steve Grasso from Stuart Frankel, and Rick Santelli from the CME in Chicago. A very good afternoon to you all. Steve, I'll start with you. I mean, are we going to have a choppy summer ahead? Today's a bit calmer, but the prior week and yesterday in particular suggests the summer could be pretty bumpy.
So when we look at all these trade headlines that we've been kind of shrugging off for the last couple of months or so, the market sort of rallies itself back to where it started in the first place. Yesterday was a new set of circumstances where we were dealt with something where it felt as if it was an overreaching argument from the Trump administration, something that he said in the past, but I think now people are starting to say, okay, usually his bark is worse than his bite, but in the art of negotiation, you have to bite eventually, or else everyone knows that you're just barking. So I think that the marketplace now is trying to digest, okay, how much is he willing to really bite? Do we really think this is going to be a little softer around trade issues? But when you start to look at the market trading as one blanket, as a China trade worry, that's where the market has digested it probably unfairly to many of the participants. What does Netflix have to do with the China trade?
Oh, I totally.
So there's so many of these, Amazon, all these different things. What do the American home builders have to do with the trade? And you see the IWMs are outperforming today. That's why the Russell has been outperforming. So yes, to your point, Wilf, I do think that you're going to see a little more choppiness, but there are going to be opportunities.
Are you saying that the market yesterday was saying there's more bark or more bite? Because now with the Harley-Davidson and the Brown-Forman
I think the market's saying that he has to bite eventually, and he hasn't been backing off this early July date. And in the past, we've seen him sort of back off a lot sooner than this. So the market is trying to say, hey, you know what? But then let's couple that and let's put it in with a couple other things. We have the end of June coming up. So we have end of quarter, end of the half year. You have month-end rebalancing. So there's a lot of mix that are going into selling the outperformers, where you saw the large cap tech, buying the underperformers. And you see that in the retail space where they're buying a lot of retail names. So I would assume that after we get past the end of June, you're going to see money going back into large cap tech again, because that's where the growth has been.
Quincy, did those large cap tech names need to have a pullback, regardless of what the catalyst for a pullback was?
Well, no, absolutely. I mean, they were overbought. A market could be overbought. A sector could be overbought for a long time, but you could feel it. It became momentum. And at some point, you need to pause. You need to consolidate. And actually, it's very healthy.
And in terms of the broader trade fears, are you concerned, or are you relatively relaxed if you're able to look through the summer like Steve, that we'll recover at some point?
You know, for the market, it's really interesting because you could have bad news just as long as you know what it is, because then you can figure out where you're going to invest. It's the uncertainty that clouds the market. And so what happens is the market then says, let's sell off, ask questions later. But the fact is there are domestically focused companies. There are companies that are going overseas but are not going to be as affected. That's what the market is trying to discern. And by the way, a contrarian trade, everyone has been talking about, well, it must be harder for China because their market is down more than ours. But perhaps the Chinese trade may be a nice contrarian trade because the Chinese are cushioning for other reasons because their economy has been slowing down.
So you'd venture into Chinese stocks?
Well, just as a very contrarian trade, because you don't want to be, consensus, completely consensus. Yeah. And you see the Chinese going in with monetary cushioning. They'll be fiscal if need be. They will do whatever it takes to
Yeah, it's a great point. On that very point, Rick, I was going to ask you, what do you think is going on with the Chinese currency? We know it's weakening pretty substantially now. Is that by accident, even though it might also help them annoy the U.S. a little bit? How are you reading things?
You know, it's a great question, and I just don't have the answer. And I'm not going to say something as a guess. We don't know. It could be a lot of different forces at work. It could be more of a demand side on the dollar. Hard to say. But the end result is the same. To some extent, it will help the export side. But when you're talking tariffs, I'm not sure how much difference that actually makes. So maybe you're right. Maybe it's more of a mosquito type move. I don't know that we'll ever know. But one thing is for sure, and I think Quincy nailed it. There's a lot of conventional wisdom, and many are trying to find what those trades are to be more of a contrarian. I think it's a glaring, easy contrarian trade. When I hear so many people from so many countries that are from bureaucracies say the following: there are no winners in a trade war, I would say horse hockey, okay? And my answer would be, then why do companies all over the world go on strike? Because it's exactly the same model. You go on strike, you're going to lose being the employees, your employers are going to lose, so why do it? Because one or both sides over time, once the new agreement is made, will make up for lost time, and they'll have a better logistical setup, and that's why they go on strike. And I think that this president is doing something maybe I wouldn't do, maybe many of you viewers wouldn't do, but he sees it a certain way. I'm not sure how it's going to end, but I feel fairly confident that the conventional wisdom description will not be the accurate one.
Rick, who's going on strike? That's what I'm trying to figure. Are we or are they? You know, I mean, who's who in this skirmish?
Oh, I would think that we're kind of the employee in this analogy going on strike, because the rules are much more rigid on the employer's side of the ledger. Yeah. And I would view China in that regard, especially all the wonderful guests we've had on CNBC that say, listen, you know, if you want to get involved in a business in China, they're only so happy to accommodate you. You get 49, right. They get 51, in 3 years they get 100. That's the problem. Maybe describing it and getting into it, trade deficit's a horrible hammer to use to crack into that, but the end result is still a valid one.
All right. Always got a great analogy. Guys, thank you all. Rick Santelli, Steve Grasso, Quincy Krosby.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.